Chinese airlines have dropped fuel surcharges on domestic tickets today after months of plunging oil prices. That means anyone heading away for the Spring Festival who hasn't yet bought a ticket can expect to pay as much as 120 yuan less than last year. Jiayi reports.
This month, airlines' fuel procurement costs have dived to around 3,700 yuan per ton, well below the 4,140 yuan per ton mark, at which the government allows them to levy the fuel surcharge. This is the second time in 6 years that China has cancelled the fuel surcharge for domestic flights. Though many people have already bought their tickets in advance of the Chinese New Year travel peak, they're still happy to know about the change.
I don't remember if I paid 80 or 50 yuan, but it's not a small amount of money, and I used to have to pay it every time. I think ticket prices will be cheaper, and I'll go by air more often just so it's convenient.
I think it's a good news for passengers like us. I will consider taking a plane more, but I will have to see which way is most convenient for me. If the train is easier, I will take trains too.
Even though the airlines will lose some income from the air fuel surcharge, they're happy because low oil prices have greatly lowered their operating costs.
We will lose 90 million yuan in fuel surcharge income every month, but at the same time, the fuel costs are going down too. It's good news, especially for low-cost airlines like us, where the fuel cost makes up to 40% of our total cost. And the low ticket prices will encourage more people to travel by air. So we're optimistic about the impact on our income.
Airline companies expect the cancellation of the fuel surcharge will improve ticket sales in March and April, which is usually the off-season for the domestic flight market. However, one analyst says the effect may not be as large as some may hope.
According to our estimates, the cutting of the fuel surcharge will increase the domestic flight demand. But we can also see that the business activity index in China has been dropping recently. So the two factors will balance out to some extent. Overall, the airline company's stock have recovered a bit starting in the fourth quarter of 2014. But we think oil prices will climb back to between 60 to 70 US dollars a barrel this year. So the airline company's performance improvement might not be as much as people imagine.
However, as airlines usually buy their fuel several months ahead, there's a time lag between changes in oil prices and their fuel expenses. The oil price this week has climbed to its highest level since the start of this year, so how much longer carriers and passengers can enjoy the benefit of cheaper oil still depends on how much longer the prices stay low. Jiayi, Shanghai Live.